Do you know what CBDC stands for? If your answer is no, then you're in the right place. CBDC, an acronym for Central Bank Digital Currency, is essentially a digital form of a country's fiat money. It's like the digital twin of the paper bills and coins issued by a country's central bank. However, unlike cryptocurrencies such as Bitcoin and Ethereum that operate on decentralized networks, CBDCs are under the control of a centralized authority. Think of it this way. Cryptocurrencies are like a wild horse running free, while CBDCs are like a well-trained horse, guided by the firm hand of a country's central bank. This centralized control means CBDCs aren't subject to wild fluctuations in value, unlike their crypto counterparts. They represent a stable digital version of a nation's currency, regulated and backed by the full faith of the government. So, in essence, CBDCs are like digital versions of the cash in your wallet, but with a few notable differences. Now that we understand what CBDCs are, let's delve into the different types of CBDCs. Central bank digital currencies can take different forms, each with its unique characteristics and uses. The two primary models are wholesale CBDCs and retail CBDCs. Wholesale CBDCs are a digital equivalent to high-value interbank settlements. Think of them as an exclusive club where only financial institutions are invited. These digital currencies are used for transactions between banks or other financial institutions. They're not something you or I could use directly, but they're a crucial part of the financial system's plumbing, making sure everything runs smoothly and efficiently. On the other hand, we have retail CBDCs. These are accessible to everyone, individuals, businesses, and other entities. This type of CBDC is like the digital equivalent of the cash in your pocket or the balance in your bank account. You can use it for everyday transactions, from buying a cup of coffee to paying your bills. They are designed to operate alongside traditional forms of money, offering a digital alternative that combines the convenience of electronic payments with the direct claim on the central bank that only cash currently provides. So we have wholesale CBDCs for the big financial players and retail CBDCs for the rest of us. They serve different purposes, but both are part of the evolving landscape of digital money. Depending on the design and purpose, CBDCs can either be used for interbank transactions or everyday purchases, just like how you use your physical cash or digital payment methods. So, you might be asking, why the sudden interest in central bank digital currencies? Well, the reasons are as diverse as they are compelling. For starters, efficiency is a huge driving force. CBDCs could streamline financial transactions, slashing both costs and processing times. Imagine sending money abroad in a matter of seconds, without the hefty fees or the usual waiting period. Now that's a game changer, especially for businesses and individuals who regularly make cross-border payments. Next on the list is financial inclusion. Millions of people around the world lack access to traditional banking systems. For them, CBDCs could be a lifeline, a way to join the digital economy, and a means to access vital financial services. Another compelling reason is the reduction of cash usage. Governments often see CBDCs as a way to lessen the reliance on physical cash. This not only has the potential to curb cash-related crimes, but also provides better transparency in financial transactions. And last, but certainly not least, CBDCs could serve as a new tool for implementing monetary policies. Central banks would have better control and visibility into the flow of money, allowing for more direct and effective policy implementation. In a nutshell, the potential of CBDCs is vast. From boosting efficiency to enhancing financial inclusion, reducing cash usage, and offering a more direct way to implement monetary policies. CBDCs could potentially revolutionize our financial systems, making transactions more efficient, inclusive, and transparent. Given the potential benefits, what does the future look like for CBDCs? As we peer into the crystal ball, we see a landscape filled with both opportunities and challenges. There are concerns to address, such as privacy and security issues. A CBDC's digital nature means we'll have to work harder to safeguard against cyber threats and protect individual liberties. The potential impact on the banking system is another aspect to consider. Will CBDCs coexist with or replace traditional banks? The jury is still out. Implications for monetary policy are also on the table. Central banks could have more direct control over the money supply, but this comes with its own set of complexities. Furthermore, regulatory frameworks will need to be established to ensure fair and transparent operations. Different countries are at various stages of CBDC implementation. Some are piloting, some researching, and others still in contemplation. As we move forward, the landscape of CBDCs will continue to evolve, shaped by technology, regulation, and the changing needs of our global economy.